Today, we're going to answer the burning question many of you are asking. Why, after record-setting inflows for the first week of these ETFs trading, is the price of Bitcoin continuing to drop? This is definitely not the time to be bearish. So we'll also cover all the reasons to still be bullish about Bitcoin over the next 2 years. Settle in, buy the dip, and let's get into it. Welcome to the Friday, January 19th edition of the Bitcoin ETF Daily Show. I'm Dante Cook, head of Swan Business. In this show, we discuss the latest news, events, winners, losers, and key information surrounding these historic Bitcoin ETFs. Here at Swan, we're on a mission to educate the world about Bitcoin. So please like this video, subscribe to the channel to extend our reach and help us cut through the noise here on YouTube. It's crazy to think that it's only been 5 days, but day 5 is in the books. It feels a lot longer, doesn't it? Total net flows across all 10 issuers is 1.2 billion of net inflows. This is slightly down from the previous day's rolling total, as GBTC's whopping 582 million in outflows yesterday surpassed the new nine's 447 million of inflows. So in total, that's 2.2 billion of net outflows for GBTC and 3.3 billion of net inflows for the others. Or, to calculate it in Bitcoin terms, because we always price things in sats, 29,172 Bitcoin purchased by these issuers. In terms of yesterday's stats, Fidelity finally edged out BlackRock with 177 million of inflows compared to the 145 million by BlackRock. This amount was enough for Fidelity to join the highly coveted billionaire club. According to EB, Eric Balchunas of Bloomberg, that makes Fidelity's Wise Origin Bitcoin Fund one of the 4 fastest ETFs to get to 1 billion in assets in history. That's out of 5,000 total ETFs. And you may recognize the other 2 on here. In total, 3 of the top 4 are all Bitcoin-related ETFs. I want to make something clear, because it seems like people are getting a little too concerned with ETF flows right now, as if it's the entirety of the Bitcoin market. ETF flows are not the primary reason why Bitcoin's price is down since the ETFs have launched. Between ETFs, funds, private and public companies, governments, and even DeFi companies, it only comes out to 10.3% of the total supply of Bitcoin out there. Let's not make this complicated. We're trying to come up with complicated reasons as to why the price is down since the ETFs have launched. Bitcoin's price rose over 80% over the 6 months leading up to the ETF's approval. There were tons of traders with leveraged long positions with options, hoping the price would spike when the ETFs were approved. Then, once GBTC started puking onto the market, they had to cover their losses. And people probably are just taking profits off the table. Hype around the ETF announcement was clearly priced in, but the actual capital they unlock and the inflows they bring in over the next 2 to 3 years is most definitely not. According to Dr. Jeff, Bitcoin is the great absorber of liquidity. It acts as the beta asset to global M2 growth. If M2 growth decelerates, Bitcoin's price decelerates substantially. When M2 is flat, Bitcoin's price chops sideways. If it accelerates, well then it increases exponentially. And right now, M2 is decreasing, so let's zoom out. Here's what Fred Thiel, CEO of Marathon Digital Holdings, had to say about what he believes Bitcoin's price will do over the next 2 years.
So I think as you add up all these things, there's reasonable, logic that supports an argument where by the end of this year, we should hopefully, and this is my personal opinion, it's not Marathon's official opinion, and this is not financial advice. My personal opinion is that I think we will exceed the prior all-time high by the end of this year. There'll be a sell-off, profit taking, and then you'll see by the end of next year, we'll exceed that all-time high by potentially 2x. And after that, who knows what's going to happen.
Let me give you a few other reasons to be bullish. Number 1, FASB. FASB is the Financial Accounting Standards Board. And in December of 2024, FASB approved new rule changes that will apply fair accounting rules for Bitcoin. This fixes the impairment problem and will allow businesses to recognize losses and gains on their Bitcoin positions and treat Bitcoin just like any other financial asset on their balance sheet. Let me break this down for you. Let's say you bought Bitcoin at $20,000 a coin. It decreased to $10,000, but ultimately soared to $100,000. Previous rules would have required you to mark down that value of Bitcoin to 10K, even if it increased in value, until it was sold off. Companies like Tesla and MicroStrategy, who saw the premium value of Bitcoin as a corporate treasury asset and bought it, highlighted in their 10Ks how it would be tough to become profitable solely because of these rules. Now that we're seeing a few $1 billion of Bitcoin being bought by these ETFs, Imagine the strain on supply when Microsoft, the world's largest company, realizes it should be allocating from its $140 billion in cash reserves. We're just getting started, people. As Michael Saylor frequently says, today, cash is a liability, a melting ice cube. If only a small percentage of these trillions of dollars in corporate cash flow into Bitcoin this year, this could lead to another wave of demand that could send Bitcoin's price higher than it already has. Reason number 2 to be bullish, potential Fed cuts. The Fed looks like it's ready to take its foot off the brake and stop its rate hikes. In fact, the Fed is now signaling they will cut rates despite CPI inflation running well above their 2% target. The market is pricing in that the Fed will cut rates 6 times in 2024, or for the Fed funds rate to drop to about 1.65%. Despite concerns with inflation, the government will continue to spend the government. And the Fed will continue to create massive bubbles the Fed. And when those things happen, Bitcoin is the prime beneficiary, as we mentioned before. Reason number 3 to be bullish. The halving is coming. In April, we're expecting the Bitcoin halving, which is essentially Christmas for Bitcoiners, where the supply of newly issued Bitcoins gets cut in half. Here's a quick recap of Bitcoin's halving schedule. In April, Bitcoin's block reward will be cut from 6.25 Bitcoin to 3.125 Bitcoin. This translates to the amount of Bitcoin mined per day dropping from 900 a day to 450 a day. Historically, Bitcoin's price has rallied both before and after a halving. Here's some analysis done by Swan's research team. This is a chart that highlights the percentage change by the day leading up to the last 3 Bitcoin halvings. As you can see here, as we get closer and closer to the halving, the price of Bitcoin is rising anywhere from 0% to over 300%. Only the 2020 halving saw a decline leading up to the halving event. And this was caused by the pandemic, where all assets fell simultaneously. Just like with the ETFs, the narrative around the halving will probably impact Bitcoin's price more than the actual halving itself. This doesn't negate your reasons to be bullish about Bitcoin. You have an exponential increase in demand with a shrinking supply. Don't overcomplicate this. If you want to read the latest deep dive on why Swan's bullish on Bitcoin heading into 2024, check out our deep dive article. The link is in the show notes. Before we leave today, I want to leave us with some thoughts from America's 3 greatest philosophers at the moment: Theo Von, Cody Sanchez, and Robert Kennedy Jr.
If you're just a renter, you just feel you're like a renter by force, like you don't even have a choice to be a renter. How do we battle against that? And is it something that a president can do or a political official can do?
They own all the packing companies. So there's only 4 meat packing companies. And those companies have a stranglehold on farmers and consumers. And they should have been prosecuted a long time ago for antitrust. But because BlackRock is so powerful, nobody will touch them.
How do we reverse that?
How do we fight that? You own the businesses you work for, buy from, and sell to. This is how we decentralize ownership and fight back against the Blackstones of the world. If you didn't know, 10 companies controlled 90% of our food. 1 in 4 homes were bought by institutions, not you, in 2022. 4 companies own all the materials that build our houses, and 1 in 3 deals are done by private equity companies. This will get worse in 2024 unless we take back owning our communities, buying them, and going small instead of selling to big.
I think Cody missed one critical thing: buy Bitcoin. You don't starve the beast by feeding it with your ETF flows. You don't get more single-family homes listed at an affordable price in America by funding BlackRock's private equity and real estate divisions with your ETF funds. You don't drive down the cost of your food by increasing their assets under management. You end it by taking custody, by taking control, by buying Bitcoin and removing it off of exchanges. To all of you who are new to Bitcoin, welcome to the drawdowns. Over time, as you become a Bitcoiner, you'll learn a valuable lesson. The short-term pain is the price of long-term sovereignty. If you like these videos, please subscribe. Until next week, this is Dante Cook with Swan. Happy stacking and stay warm.
The song's about wishing the government would take away all our money. All right, here we go. First job at 17, trying to make enough to buy her dreams. Look down at the money I made. The government took it all away. So I crashed my car on the corner, struck a lighter, bought from the store there, shrugged my shoulders to the wind. When I found out where my money was going, I smoked my first cigarette, stressing over I go.